Welcome to our first breakout session of the day, the Microlenders session. My name is Melissa Bula-McGinnis with W Marketplace, the co-host of today's event, and I am your tech lead for the session. I'd like to introduce you to the moderator today, Jessica Gordon from the U.S. Commercial Service. So take it away, Jessica.
Thank you so much, Melissa, and welcome everyone. I'm Jessica Gordon, Director of the Commercial Service Dallas-Fort Worth office, and I'm very pleased to be moderating today's topic on microlending. I know a very much so hot topic, an interesting one, and I know that it's become increasingly important for small businesses, as it is an alternative funding for small businesses who may not be in the position to secure working capital from more traditional financial programs or means. And so I'm joined today by two amazing women entrepreneurs who are going to be sharing their experience and expertise with you. So I'm joined by Alisha Griffey, founder and CEO of Daintree Capital, and Anya Emerson, co-founder and COO of Mitely Incorporated. So we're going to jump right into the conversation. I'm going to start with Alisha. Alisha, if you will, please introduce yourself and tell us about your organization and your mission, and how do you support women in business?
Happy to. Thanks so much, Jessica. I provide a little bit of an overview in the plenary session, but for those of you who weren't there, my background is actually mostly as a startup operator myself. So I spent a decade in the startup world as a COO, a CFO of 3 different startups. So I've been in your shoes, trying to raise money. I've done it successfully. I've done it unsuccessfully. I've taken all sorts of money from different sources. And over a decade, I developed a lot of opinions about what is and isn't working in how companies get funded and in who gets funded. And so I found myself increasingly frustrated by 2 things. One was the fact that I just didn't see female founders getting money. It wasn't in my circle. I wasn't seeing money flow to women and to people of color. And the other frustration I had was that it was the same kinds of companies that kept getting funded. So if you were a tech SaaS business, Silicon Valley would run to you. That's wonderful. Great. Here's all of our money. As long as you're, promising $1 billion valuation in 5 years, people were happy to write checks. But for a lot of these companies that had an interesting product, an interesting service, they had customers, they were growing, but maybe not at these, sexy hyper rates, and maybe not chasing these huge mega markets. There was something about the way they were approaching it that made them, quote unquote, not sexy enough for Silicon Valley. And those companies would get overlooked. So when I founded Daintree Capital 2.5 years ago, I decided not only to focus on getting money specifically to women and underrepresented founders, but to invest in them in a way that was well aligned with the kinds of businesses they're running. Or to be clear, not just that women only run these businesses, but that we'd invest with all kinds of businesses, that we weren't going to narrow ourselves to one business model, which is what a lot of equity investors do. So we provide working capital loans. We are happy to invest in any business, no matter the industry they're in. They only have to have $100,000 in annual revenue and strong unit economics. And as long as they've got a growth story to tell us of, hey, here's how I can take this money and here's how I can drive near-term revenue, then we're happy to talk to them about a loan.
Yeah, that's so incredible. And I'm going to come to you, Anya, in just a moment. But in talking about the programs that you offer, Alisha, can you tell us what the high and the low range of your programs are and the average?
Sure. So in terms of the eligibility, the companies we really target, our sweet spot is 100,000 in annual revenue up to about 2 million, though we have some companies that go, 3 million and beyond. But really our sweet spot is 100,000 to 2 million in revenue. And in terms of our check size, it's 10,000 to 75,000. So what we tend to have is a lot of companies that are, most of them, not all, most of them are sub $1 million. You've got companies like Mitely, they're just jumping over that. And honestly, that's where we get excited. I want to try and get more companies from under $1 million in revenue to over $1 million in revenue, because that's where a lot of other investment options and lending options and capital options become available. So that's our check size. We have both principal and interest loans, and we also do revenue-based loans. Happy to chat more about those if of interest.
Absolutely. I'll be asking some more questions specifically about your programs and how to get companies engaged. So now I want to turn over to Anya. Anya, can you introduce yourself and tell us about your business and how do you get started?
So my name is Anya Emerson. I'm here in Oakland, California, and I'm one of the 3 co-founders of Mitely. Mitely is a sustainable children's company. You can actually see all the clothing behind us.
Oh, I love seeing the product.
It's beautiful. It's really beautiful. And we started back in 2019. And I'll tell you my story, and then I'll tell you how the company came about. I'm actually a former domestic violence attorney. And I worked for 10 years on women's rights issues and on domestic violence. And I saw the economic imbalance going on in those relationships every day. And it drove me crazy. I mean, I saw divorces where the man had founded the business and the wife had helped him the whole time, but she got very little or nothing. And I just got very frustrated in the sense of women need to be involved in economic life. Women need to found more businesses. At the same time, my friend, been friends for many, many years, was leaving her business, and she's formerly worked for Fair Trade USA, worked for a bunch of large apparel companies, and she was leaving her business knowing that she could do it better. Essentially, if you want to go out and look for quality children's clothing that is mid-market price, so you're not paying $60 for a t-shirt. If you want something that's organic and fair trade certified, it doesn't exist in the current market, except for Mitely. So we came about, we had our 3rd partner join us. She's our chief creative designer and product officer. So it's been the 3 of us. It's the 3 of us then, it's still the 3 of us, although we certainly use a lot of agencies and consultants to help us run the business. We are available on Amazon. We are available on Target. We're launching a national wholesale boutique program, and we have our own website, mitely.com. Our sales are just shy of $1 million right now. So we've grown it. I think we were 50,000 the first year to just shy of $1 million. We'd like to do better. And as Alisha says, we are hitting that $1 million threshold. One of our new channels this year has been the W Marketplace, which is very exciting. I am very much in favor of women entrepreneurs helping each other. The W Marketplace, for those who don't know, is a way that if you want to buy from women-owned companies, you can go to them and you can buy from women-owned companies. But in order to get to this spot, I've had to research pretty much every single revenue option out there. And Daintree, I think we're on loan number 4 through Daintree. Daintree's been one of our biggest supporters. So I'm happy to give more information. I'm going to turn it back over to you guys. But I can talk pretty much the whole gamut from SBA to crowdfunding to microloans like Daintree.
Wow, that's incredible. Congratulations on your success. And thanks for sharing a little bit of background of how you got started. I'm going to turn back over to you, Alisha. And so I'm sure by now, a lot of the women entrepreneurs on the line are inspired to see this pair, right? You provide a resource and Anya was able to benefit from it and grow her business. So can you talk a little bit more about what your typical client looks like in terms of, their profile, and then 2, maybe a little bit more about the programs in terms of what are some of the basic requirements you need to see from a company?
Sure. So, my typical client is, a woman who's founded a business probably 2 or 3 years ago. So they're relatively early on in the life cycle of the business. They've got something that's working, right? They've got customers who are paying for either their product or their service, and they're excited by their growth. And they're all of a sudden, they've maxed out their credit cards. They've maxed out like their ability to self-fund from whatever savings they have. And they aren't quite sure what the next step is. And they've heard about lots of different options, and they go to their local bank, and the bank says, great, once you have $1 million in the bank, come back and we'll give you a loan. But until you have $1 million in the bank, you know, we can't do a loan. And so they're really struggling to figure out how to capitalize on the opportunity that they have, you know, because these are women who it's working, right? There's something that's working. They've got customers who are buying their product. They've got, you know, customers who are asking for more. And yet they don't have enough cash on hand to really invest in that growth. So that's the story I hear again and again. Now, while we invest in companies across every industry, I will tell you, we end up doing a lot of inventory financing, which is similar to what we did with Mitely, because there's this cycle that a lot of companies get stuck in where they have a product, they're selling it, and the revenue's taking off. So they now need to go buy more product, and they have to forward purchase that inventory. And as that revenue is going up, the bad news on that hockey stick is your inventory costs go up. And when you layer on top of that COVID, where supply chain issues are becoming a nightmare, your inventory costs really start to balloon. So that is a lot of where we have come in is in helping in those situations. So what we look at as we say, hey, tell us about your product, tell us about your market, tell us what it is you're building and why this is compelling, you know, show us what the opportunity is you're trying to chase, and help us understand why, you know, why right now there's this constraint. And then let's really look at the economics of your business. So when I first met Anya and we first started looking at the first loan we did with them, one of the questions I asked her, and I ask every single company, is let's talk about your unit economics. I want to understand for every single one of those, you know, beautiful, colorful sweatshirts that Anya sells, what do the economics of that look like? You know, how much does it cost her in terms of material, in terms of labor, in terms of any other variable costs? So that I, as a lender, can get comfortable with the idea that if I give you money, it's going to help you grow versus it's going to dig you into a bigger hole. Because there are times when debt is not the right solution and you're just making a small problem a bigger problem. And so that's really the focus of the conversation I have with these founders, is understanding those unit economics and getting comfortable with the idea that there really is an opportunity here for a long-term sustainable company, a viable business, and that short-term infusion of cash is going to really help them jumpstart growth.
Yeah. So I hear you saying it's important to ask the right questions and those really look at those unit economics. And so I'm imagining from a small business too, I would start to think about when is the appropriate time, right, for this type of solution? When should I be pursuing these type of opportunities? So Anya, what happened to make you realize you were ready to search for outside financing and funding?
Well, like a lot of things that happen in this world, the way we got hooked up with Daintree was completely fortuitous. There's a couple. So first of all, I don't know that many other microloan programs. Daintree is pretty unique. We were able to get a microloan through Hebrew Free Loans. That was actually our first loan ever. We started the company essentially with $100,000, and about half was founder money and a half was that Hebrew Free Loan money. I think Daintree was maybe our second loan. We are a consumer product company. We needed, you know, for you women out there who have service-oriented companies, you're not going to need so much cash to get started. We have to buy, as Alisha says, we have to buy our inventory 3 to 6 months in advance. And right now we've got, I don't know how many products we have, but we have 22 different parent SKUs, leggings, sweatshirts, t-shirts, et cetera, in different colors and in different sizes. I simply mentioned that to say that we needed substantially more upfront money to get started than a lot of other businesses do. So essentially from the get-go, I was looking for funding. The way I met Daintree Capital was we had applied for what used to be called CEO Ventures, but I believe they've changed their name recently to Corrales Ventures. They have a nationwide competition. I actually am pretty sure it's international, so not just US competition every year where you apply and submit your business idea. It can be a very beginning new business, and they offer interest-free loans of up to $100,000. So I applied through there. We didn't get it, but Alisha reached out to me and said, by any chance, do you need help with inventory financing? And I said, yes, great, exactly, sure. I had at that point spoken with some traditional banks. The traditional banks all wanted loans to be personally guaranteed. So they're going to look at your credit, it will go on your credit. And also banks were generally wanted 3 years worth of business record, which we did not have at that point. And they also were willing to give us, I think at max, 1 month worth of, or a loan in the amount of 1 month worth of revenue, which I don't know, at that point was, I'm going to make that $20,000 because we were selling 200,000 at that point. Well, $20,000 is not going to buy me inventory, enough to scale the business. I mean, it's not even going to buy me inventory enough to survive. So, Daintree was wonderful, and that's the story how we met. As I said, I've also had to look for other funding sources, but we can come back to that if we have time.
Absolutely. So I'm inspired. What I'm hearing is that, ladies, if for whatever reason you have looked at traditional banking options and it just wasn't a good fit at that time, don't give up. There are other resources available. And we're going to get now into that relationship a bit, Alisha. So can you tell us how important is a relationship between you and the business? Please tell us a little bit more about your relationship with your fellow panelist, Anya.
Yeah, it's funny. When I founded Daintree and I told people what I was going to do, everyone from the investor side said, "You're crazy. Like, what do you mean you're not going to take collateral? What do you mean you're not going to ask for a personal guarantee? What do you mean you're going to work with companies that are early stage?" They all said it was crazy. I happen to be motivated by the fact that I just want to see more female CEOs in this world. And I am excited by the idea of helping these businesses grow. And so I ignored all that advice and I said, you know what, I'm going to try this initially and see if it works. And, if it doesn't, I'm losing my own money and so be it. And luckily it has worked. And so now, we're kind of growing and expanding. But what that means to your question about relationship is the relationship matters a ton, because at the end of the day, these are relationship loans as much as anything else. When you're betting on a company that's only, say, 18 months old, and you're not doing a credit check and you're not asking for a personal guarantee, at the end of the day, you're placing a bet on a person, because there isn't 5 years of track record. There isn't $1 million of cash in the bank. There isn't collateral that you will get in the end. So the relationship matters a ton. I get to know these founders through the screening process, where I'm trying to understand about their business. I'm trying to understand about what they're building. I also, I'm always curious, like I give them feedback along the way. I see how they respond to that feedback. And we really dig into their financials, and I ask a lot of questions, and often it's less, none of it is a trick question, but it's always interesting to see, like, how do they respond to someone kind of poking around in their financials? Do they try and, make up an answer when they don't know it? Or they say, you know what, that's a good question, let me get back to you with it. So there's a lot of information I glean that is more art than science through the process, admittedly. And the last step we take in our due diligence process is we ask for references, because I think it's incredibly important to understand more about who these founders are, what kind of advisors do they have, who are they turning to for information and support and advice. And so those references have turned out to be extremely valuable step in the process. And I always ask to talk to two references. One is always someone kind of from the 30,000 foot level. I want to talk to an investor, an advisor, a mentor, someone who understands, how the founder has been navigating the founding of this company and their growth. And then the other is a reference from the operational side, so like in Mitely's case, it might be like someone where you'd say, hey, can I talk to your buyer at Target.com? Or can I talk to one of your manufacturing partners? Or can I talk to your warehousing landlord, someone who you're really working with? So in the situation with Daintree, because we're approaching our loans so differently, because we're not You know, a lot of banks have these ratios. They like pump the numbers into the spreadsheet, out come the ratios, and they say, yep, you qualify, or no, you don't, and here's how much you qualify for. And when you do everything based on an algorithm, the relationship may not matter as much because the numbers, you know, spit out an answer. When you're not relying on an algorithm and you're really relying on getting to know these women and trying to understand their business, the relationship matters a ton.
Yeah, thank you for sharing some of the requirements that you have. I think another magic question might be, do you require a business plan? And is there any other type of documentation in addition to references that you require?
Yeah. So for Daintree, it's really a two-step, well, I should say it's a three-step process. The first step is really understanding about the business and the strategy and what are you doing. And that's as simple as it's a Zoom call, right? We're getting to know each other. We're trying to understand at a high level, is there a good fit between what the founder's trying to build and what Daintree could fund? So that's kind of the more descriptive strategic side of the business. The second step is all about the financials. And so for us, there's 4 pieces of information we require. The first is your last 12 months income statement. The second is your balance sheet, most recent balance sheet. The third is your last 3 months bank statements. And the fourth is the unit economic analysis that I mentioned, which is really an understanding of your profitability at a per product or per service level. So it might be geography by geography if you're a service company, or it might be, SKU by SKU if you sell a product. But understanding that profitability. Those are the 4 pieces of financial information we ask for. We look at them, we ask, kind of dig in, ask a bunch of questions, have a conversation with the founder to understand the financials better. And then that final step is the reference check. So those are the 3 steps for us, and that's the information that we require.
Yeah. And Anya, considering that Alisha shared some of those requirements and the type of questions that are asked, in your experience, what type of support did you expect from your investor, your lender? And maybe what were some of the questions that you didn't feel most prepared for?
Oh, that's a hard one. Let me just back up a second. I just want, because I saw there was some confusion over what Alicia's requesting. The basics of what Alisha and pretty much all lenders are requesting are essentially the management reports that you can pull from a software program like QuickBooks. So we use QuickBooks Online. And so when we get a loan from Alisha, I need to run reports on QuickBooks that are the profit and loss, the balance sheet, and whatever that third one is that I forget.
Bank statements.
Yes, bank statements. So I provide her with bank statements and those 2 reports from QuickBooks Online. You don't have to use QuickBooks Online, but I would recommend a similar program if you don't. So she has insight into our finances. The unit economics that she's talking about, because again, especially if you're not in the consumer product world, you might not be familiar with that. It's essentially how much does it cost me to produce a product? So if I sell a t-shirt for $10, how much am I paying to manufacture that t-shirt? For us, it's about $3. Okay, so if I can manufacture a t-shirt for $3 and I can sell it for $10, I have pretty good unit economics. I have a 70% buffer to pay our other expenses, to pay our general overhead, and to repay loan payments. So that's what, those are the kind of information we provided to Alisha. At that, we did have a pitch deck. So for you all starting out with new businesses, I would recommend developing a pitch deck. It doesn't have to be 50 pages long. It could be 5 to 10 pages long. There are plenty of online resources and people better than me, I have to say, that are out there to help women develop pitch decks. But a pitch deck is essentially, it's kind of business plan light. It's your business plan for someone who can take a look at it and in 2 minutes understand what you do, what your value proposition is, and what your plan to make money is. So I would definitely recommend having those 3 things in hand. Beyond that, I would definitely say, relationships with lenders are important. And I think every borrower's relationship with every lender is going to be different. I mean, it's going to be different based on the institution. It's going to be different based on what the company needs, what the lender can offer. I think Alisha's made a couple of very good references for us. If I need to talk to someone, I can call her up and say, hey, do you know anyone here? You know, send me that name. She can make introductions. So we've definitely helped back and forth on that way. I love talking to her about her business model because I really want Daintree to go from, I don't know how many millions of dollars there are now, Alisha, but I want it to be 10 or 100x because there is such a need for their services out there. And one company can't do it all unless you get really big, of course.
Absolutely, there is an incredible need, and we're gonna, thanks for sharing those nuggets. We're gonna shift to Q&A in just a couple minutes here. But Alisha, I want to come back to you and ask a question. You've talked about costs, and so with many increasing costs, small businesses, you know, they wrestle with changes in expenses and their own pricing strategies. How do you recommend a company work with or lender investor during challenging economic times?
Yeah, no, it's a good question because I've certainly seen firsthand how much it's changed the economics of people's businesses in two ways. One is people are always talking about like, wow, what used to cost me 30 cents last month now is costing me 40 cents. You know, the inflation is real, and that is impacting the unit economics of businesses. And then the other way is with supply chains. You know, the supply chain disruptions and the supply chain just length, you know, being spread out in terms of time has real financial implications. So I think that, you know, in those situations, my view is transparency is best, because when you're talking to any lender, not just Daintree, when you're talking to any lender, you know, if they're willing to say yes to you on a loan based on information that is not accurate or information that was not fully disclosed, it's going to come back to bite you, right? Like it's not going to end up well if a lender is giving you a loan based on information that's not fully accurate. So I think it's much better to say, look, I'm in a bind. Here's the situation. You know, I have XYZ commitments that I've made. Now this supplier increased this cost. I still have all these customers. They're really excited about this product, but I now I'm having this pinch because my, you know, my costs have gone up. In those situations, I, you know, work with the founders and we try and figure out how to adjust things, right? Because if you come to me as a lender and you say all those things are true, then I'm going to say, okay, well, let's see, what's the new reality in terms of what it's doing to your profitability? Well, what does that mean? Does that mean, can we change the price? You know, is there flexibility on pricing? How do we think about, is there other places where we can cut costs? So it becomes a dialogue about how do we get to the right output that we both want, which is a sustainable business, right? That's what we both want. If Mitely is successful, Daintree's successful. If Daintree's successful, I'll be able to help Mitely more. It's there. Everything is very symbiotic. So I think having these conversations is really important. And I think founders are sometimes afraid to share the bad news with their investors. And I think, I as an investor who does both lending and equity investments, I can tell you, I am always trust the founders more who come to me and proactively say, I've got a problem. Can you help me? I'm in a bind. Than the ones who every time you talk to, it's like everything is rainbows and unicorns, because you don't trust that it's always right. That's not the reality of startup world. Things don't always go well. There's always bumps in the road. So I encourage transparency. I encourage honesty. And if you find the right lenders, you find the right investors, they will work with you because they will be successful if you are successful. And that's why, you know, the way Daintree we've structured our loans, we want to make sure our incentives are always aligned with the founders. I saw a couple of questions in the chat about, kind of rates and some of those details. I'm happy to talk about that because I think it all, you know, foots together. I don't know if you want to go on to a different subject though, Jessica.
Yeah, thank you, Alisha. Let's jump right into our questions. We have quite a few that have come in, so we're going to try to address as many as we can in the time that we have allotted. We have about 14 minutes. So the first question is, are any of the loans available to nonprofits?
Yeah, so there are loans in general available to nonprofits. Daintree does not provide loans to nonprofits, and it's not because we won't in the future, but it is because limited amount of capital, trying to focus on a really narrow investment thesis, which is getting investment capital to female and other underrepresented founders. And we're just focusing on that part of the market because there are other sources of capital available for nonprofits. So it's just, we're not there yet.
Yeah, thank you. Another question is, what is the process time for a $20,000 microloan? What is the average interest rate for a microloan? And which credit score is used, business or personal?
So let me talk about all those things together. So our process is relatively fast because we're small, right? We can turn things around quickly. So once the founder has gotten us all the information we need, the 4 financial documents I mentioned, the references, et cetera, once we have all that information, we can turn a decision around in a few days, and usually, cash can change hands, we know, within a week or 2. So that is fast. What usually slows it down is more the founders are still pulling together the financial information, et cetera. So process can be very fast once we have the information. In terms of the rates, and I saw someone else asked about like Shopify and other sources, there are lots of lending options out there, and some of them are fantastic and they are low rates, whether like the CEO or the Corrales loans, like they're 0%. Doesn't get any better than that. The EIDL loans that are like 2% over 30 years, a lot of the SBA loans, a lot of these loans are amazing. What I hear again and again is, yeah, those interest-free loans are great, but it was for, this much money and I need this much money. It doesn't go around. So what we've done with Daintree's loans is we've said, okay, we're living in a different part of the market. We're a for-profit business ourselves. I am a founder too, running my own business. So we are a for-profit business charging market rates, but we're designing everything to be founder friendly. And by founder friendly, what we mean is some of the things I mentioned. So there's no collateral, there's no prepayment penalty, which is really important, because if you find your way to cheaper capital, if you find a nonprofit 0% interest rate loan, and last month you took out a Daintree loan at a higher rate, by all means, repay the Daintree loan, take the cheaper capital. I don't ever want founders to feel locked into expensive capital. So that is always an option. So in terms of that, and then in terms of the no collateral, in the case of default, which knock on wood, we haven't had yet, but it will happen, instead of chasing someone down in a collections process or a legal process where that's antagonistic, where we say, I'm going to hunt you down till you repay my loan, we take the unpaid portion of the loan and we turn it into a safe note. And the whole idea, again, is that we want Daintree's incentives and the company's incentives to be aligned. We want to continue to work together to make sure that the company is successful. And our hope is that it is a loan that is repaid. But if something goes wrong, we'll convert it over to a safe note. And then we have an incentive to want your company to still be successful in the long term. It's just a different type of investment. So that's what I mean by being founder friendly. In terms of the actual rates we charge, our interest rates on an annual basis are between 10 and 15%. We stay below 15% because we always want to be cheaper than credit card debt. We don't want to compete with anything above that. We're just not in that market. And our rates are not below 10% because these are unsecured loans with early stage companies. So they're higher risk. So Shopify Capital and some of these other ones, they can be amazing and fantastic. They can have some great rates. What I understand from founders is it's usually not enough money. And by the way, the reasons why their rates can be really low is because they suck the money out before you ever see it, right? So if you're doing $10,000 a month on the Shopify platform, they can suck $2,000 out of that for your loan payment before you ever see the money. So they really have no risk, right? They get every dollar first before you get any dollar. So it's a low risk proposition for them. They can have low rates as a result, which is great for the founders. Use all of those sources. Go take the loans out. It's awesome. but it's may not get you as far as you need to go. And so then that's where Daintree steps in, where we have different options that can plug the gap for some things that maybe you need to do that, for whatever reason that you're not qualifying on some of the lower interest rate loans for.
Thank you, Alisha. Wow, you shared so much good information. I wish I could take notes on all this, but we're recording it, so it is captured. The next question is actually more of a scenario-based question. So it's, my company is new, 2 years, but the work I do, I've been doing for over 20 years, but for other companies. When applying for grants, loans, I'm finding that most companies want you to have at least $25,000 in revenue already. Are there grants out there for companies making $20,000, or will I have to wait until I get to that bracket?
So there are some, and what I would tell you, and Anya, you probably have some thoughts on this too. I often hear about people having success when you're a brand new company with some of the local organizations in their city, in their county, in their state, because there's a lot of incubators, there's a lot of grants, there's a lot of geography specific resources where they want you to start a company in their city or in their county or in their state. And so I would encourage you, if you're really at that phase where you're either pre-revenue or less than 25,000 in revenue, to look at like the local chamber of commerce, the local, economic development bureau, all of them have different names and different geographies. And I would also encourage you to start looking at boot camps and accelerators and incubators, because a lot of those come with resources, and sometimes they come with grant money, or sometimes they come with, cash, in exchange for equity, a percent of your company. So I would look at some of those options when you are pre-revenue or very, very early on in revenue. My opinion is debt is better for when you have revenue, because you need some cash in order to pay off the debt. And so getting into debt before you have revenue can create a challenge for you later on. I don't know, Anya, what thoughts you have on that?
Various thoughts. So even the SBA, unless you get kind of and the SBA has some special programs. So I'd encourage everyone with a new business to look at special programs for the SBA. But even the SBA may come back for a regular SBA loan and say, you need 3 years of business reports. We went, don't take my word for it, talk to the SBA people, but we went instead. When I called the SBA, when we started out, they said, no, you're not eligible, but you should talk to your local community development foundation. So the community development foundations, at least in California, are essentially microloans. SBA for bigger small businesses, community development foundations for small businesses. So we went there first, and we were able to get 2 loans from there. The one in San Francisco is called Working Solutions, but they're all over, and they are in every state. I should not say they're just in California. Putting my global hat on here, though, is when you're at least an inventory-based business, and sometimes not, you have 2 things to consider. Is it or is it not personally guaranteed? And by the way, if it's married, if you are married and you're personally guaranteeing it, that kind of means your spouse is also personally guaranteeing it. So that's a conversation that you should have with your spouse before you go signing papers. And then in addition, for inventory businesses, often the SBA and these community development foundations will put UCC liens on your product, on your inventory. That is just a piece of paper, unless you were to, say, go out of business, and then they could come in and take a hold of that inventory. But one issue is that lenders don't like stacking UCC liens. So you can't necessarily go out and get one loan with a UCC lien here and then the next loan with a UCC lien here. So, so where you take out loans, how you take out loans, you should be very strategic about it. And especially if they have a UCC lien or a personal guarantee, do I need this money? Is this the best place for me to get it? Is there another option that is better? And that's why Daintree Capital is so great.
Thank you, Anya. So I know that we are running short on time. We have about 4 minutes left, and I still want to ask you all a couple of questions. But I'm going to summarize some of the questions, and it's going back to the requirements that you mentioned, Alisha, for Daintree Capital. So what are the 4 requirements again? Income statement, balance sheet, bank statements, and what are the other requirements? And can you talk a little bit more about the pitch deck?
Sure. Unit economics was the last one of the 4, and I think it's in the chat now too. And just to remind folks, unit economics confuses people. Unit economics is really just understanding what is the profitability of your business at the product or service level. So whatever the fundamental thing is you're selling, what is the profitability at that level? So those are the 4 things, and they're in the chat. And then, sorry, what was the next question, Jessica?
So I did see a question in here that just mentioned the pitch book.
Oh, so a pitch deck is what most investors will ask for. Equity investors, it's kind of the currency they operate in. Send me your pitch deck, send me your pitch deck. We don't require a pitch deck. If you have one, I always like to see it because it's generally a great overview of your business. So we do ask if you have one that you send it, because it's a quick way for me to understand your business, but it's not a requirement. And you would also ask that business plan is the other thing people ask about. Do you require a business plan? No, I don't require a business plan. I do require that you're able to clearly articulate to me what's the problem you saw in the market, what's the solution you're bringing to bear against that problem, and what are the economics of your business. If you can walk me through that verbally, that's fine. I don't need it in a Word document. I don't need it in a PowerPoint, but I need to feel that it's compelling and it's not just, hey, I, got stuck at home and had this idea and I didn't do any market testing and I'm not sure who's going to buy it. I need to really understand that there's a viable business there.
Awesome. And one last question, the big question, how can a business connect with you on your programs, Alisha? Yeah,
absolutely. So our website's the best starting point. And if you go to Daintree.capital, I'll put it in the chat. But that's the best starting point. And there's a form on our website it's called Loan Inquiry. And it's just super short, less than 2 minutes, gives us the basic information on your business, gets you into our system. We'll send you information about, if you don't have the notes of what did I have to submit, we'll send all of that to you. That's the best way to get in touch.
Thank you so much. And Anya, I'm going to actually let you have the last word. If you can give just one piece of advice to the women entrepreneurs on the line, what would that be?
First of all, our website is mitely.com. Please go check it out. Holidays are coming up. But my one piece of advice is that I'm going to put my lawyer hat on here. There are some bad actors out there. And once you put yourself out in the community as a woman in business, I have gotten emails saying, hey, I'm ready to write you a check. You just need to send me all your financial information. If it is too good to be true, it is too good to be true. And you actually do need to be careful about this. Sometimes they specifically target women-owned businesses because we may not have the background and sophistication. And just be careful out there. Please go with people you trust.
Wow. Thank you all so much. Thank you, Anya. Thank you, Alisha, for sharing your experiences with us. It's been wonderful to have this conversation with you. I want to thank all of our participants for joining us. And if we did not answer your question, I do want to make a note that we have captured those questions and we will be responding to you via email. This does conclude our session. Thank you.
Thanks, guys.
Hello, everyone. Let's move. All right, fantastic. Okay, thank you to all of our speakers and our lenders. Anya, Mitely, that was fantastic. I personally love Mitely. You can find them on the W Marketplace. I love the quality and style. My kids appreciate the comfort. So definitely check them out. I'm going to go ahead and drop their link into the chat window as well.